Hello, everyone. Nicole Payne, CMA. I normally come to you to drop some accounting truth bombs. Today, we're going to keep it a little bit more real. Full disclosure, as of the time of this recording, I've been awake for a little over 24 hours, and the bulk of that has been spent in my office working on one particular project. So that's where this video comes into play. I'm going to try to keep everything PG, but just being honest, this is probably going to be 1 part PSA and 3 parts rant because I am just so frustrated on behalf of this particular client that I've been working on. A little bit of backstory. One of our clients came to us recently and they had worked with not one, but 2 other accounting firms in the recent history, and their books, they were just not very happy with what was going on with their reporting. They weren't getting consistent reporting. So they came to us, asked us to review what had been done over the past couple of years as they were making some big business transitions, and they wanted to make sure everything was clean and ready to be put out in terms of making these big decisions. And the more we got in there and poked around, the bigger the mess became, the more mess we uncovered. Frankly, this client was getting bullcrap out of these other accounting firms. And I'll be a little bit more specific about what that bullcrap really was. So these accounting firms were doing a lot of just plain lazy accounting. Just plain lazy. And you might say, wait, Nicole, why do you call it lazy accounting? As we were going through the bank accounts and looking at the previous reconciliations, we noticed unusual transactions, things that weren't actually happening on the statement, but were getting recorded. Turns out that they were just balancing the accounts. So instead of actually reconciling to the statements and looking at each transaction that was coming across, if there was a difference, they would write it off to either an uncategorized asset account or an opening balance equity account. Now, just from the sound of that, uncategorized asset. Anytime something is uncategorized, that should be a big red flag. There's no such thing as uncategorized transactions. And uncategorized transactions means that you just didn't take the time to look at that transaction and find out what it was. So those accounting firms were just being lazy. They weren't actually looking at the transactions that were happening, and they were just writing it off to a balance sheet account. Every expense, every asset has a category. Whether it's taxable or non-taxable, it fits into a category. So there should never, ever in your books be a time where you have uncategorized expenses, uncategorized assets. Just don't let it happen. But opening balance equity, this was the one that really has me all fired up this morning. There's only 2 times, really only 2 times, when you should be using opening balance equity, or your accountant should be using opening balance equity. The first one is if you open a business and you're just doing things small. It might be your side hustle for a while, and for several years, or whatever the case may be, it's your side hustle. So you're just putting the books together in a spreadsheet, or you're just keeping track of your receipts, and you put together just a list of what your expenses were for the year and what your income was for the year. And that's how you record your taxes. And then you finally get to the point where, okay, this is becoming more of a business, so I need to treat it like a business. And you start working with an accountant. You might already have a bank account set up for that business. You might already have some debt set up for that business, whether it's a credit card or a loan. You might have purchased assets for the business, vehicles, furniture, equipment, whatever the case may be. The business has been operating. It has accounts in its name that need to be accounted for when you start your book accounting software, whatever books that you're going to start with your accountant. As the accountant, we put those existing accounts on the balance sheet using the offset of the opening balance equity, because that truly is equity that you have in your company as of the time that you start working in the accounting software. The other time that you use opening balance equity is when you're transitioning from one software that you might have outgrown into another software that doesn't play nice and you can't just do a quick merge. Like some people who go from QuickBooks Desktop to QuickBooks Online, Intuit plays nice together. You can merge those two, upload the data from desktop to online and vice versa. And all's well and good. You keep all of the history. But if the two accounting softwares don't play nice, you want to keep some of the history as if you're starting fresh. But you want to keep that information about the accounts that you have, checking accounts that you have, credit card accounts that you might have, loans. All of those things need to go into the new accounting software in order for your books to be correct going forward. So that also would offset opening balance equity. But it should be a one-time thing. It should not be something that happens regularly. And it definitely should not be happening multiple times every single month. So, friends, here's my PSA. If you are working with an accountant or a bookkeeper or some sort of a professional who is consistently using uncategorized expenses, uncategorized assets, opening balance equity, drop them like it's hot. Please save yourself the time, the effort, the energy, the frustration, and transition to an accountant that doesn't suck. Because the biggest thing that has me frustrated about this project that I'm working on, it's not the fact that this client has paid for a service and now is having to pay me and my team in order to clean up the service. Yes, that is frustrating and that is costly. But the biggest cost is in the fact that all of this time that I'm spending working on cleaning up after other accountants is time that I don't get to help you figure out how to make your business better. And that is the shame. That is what fires me up and is making me so frustrated, because this project has taken up no less than 40 man-hours a week for several weeks. There are days where we've had 40 man-hours working on it in a single day. And that's time that we can't help our clients do better because we're having to clean up and make sure that the past is decent enough to keep them going. So, if you are tired of working with an accountant that sucks, come reach out. My contact information is at the end of this video. As always, we're open to comments, questions, concerns. Reach out, hit us up in the comments here or in our email, call us, and we will try to make sure that you don't have to feel like you're working with an accountant that sucks. Anyway, take care, everybody, and we'll talk soon.